Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate documents to find the real story. And today we're diving deep into the latest S. EC filing from Nushares ETF Trust, and folks, their latest report is packed with numbers you absolutely need to see if you care about what is happening in the bond market and how your money might be working for you. Stick around, because we're about to decode the key takeaways that matter before we jump in. If you love getting these clear, no-nonsense breakdowns of financial filings, make sure you're subscribed and hit that notification bell so you never miss a decoded insight. Also join our exclusive Corporate Decoder Discord community linked in the description below for more direct chats and analysis. This filing is an annual shareholder report for several Nuveen ETFs, and it covers the financial period ending the 31st of July 2025. And by the looks of it, these guys are managing quite a bit of money with combined fund net assets, reaching well over $400 million for the NUB fund alone. Now let's talk about what is really interesting, the financials. And how these funds actually performed. Let us start with Nuveen AABBB CLO ETF, or NCLO. It saw a return of 3.94% since its launch in December of last year, which is pretty much in line with its benchmark, the JP Morgan CLOE index, that returned 4.14%. Then we have the Nuveen Core Plus Bond ETF, or NCPB. This one returned 3.88% for the last 12 months, beating the Bloomberg US Aggregate Bond Index, which returned 3.38%, a solid win for NCPB there on the performance front. Next up is the Nuveen Enhanced Yield Us Aggregate Bond ETF, or NUAG. This fund brought in 4.05% for the last 12 months, its custom index, the ICE-BOA Enhanced Yield Us Broad Bond Index returned 4.21%. The difference here is pretty much due to management fees and other expenses that the fund has to pay, but it shows the fund is closely following its benchmark. The Nuveen ESG 1 to 5 year US Aggregate Bond ETF, or NUSA, showed a return of 4.54% for the last 12 months, but its custom index, the Bloomberg MSCI 1 to 5 year US Aggregate ESG Select Index, did a bit better at 4.76%. Again, the difference is mostly expenses. The Nuveen ESG High Yield Corporate Bond ETF, or NUHI, delivered a strong 8.34% return for the last 12 months, which is right in line with its custom index, the Bloomberg MSI US High Yield, Very Liquid ESG Select Index, that returned 8.47%. The Nuveen ESG US Aggregate Bond ETF, or NUB, returned 3.20% for the last 12 months, slightly underperforming its custom index. The Bloomberg MSCI US Aggregate ESG Select Index, which saw a 3.38% return. The filing mentioned sector allocations were consistent between the fund and its index, so this slight underperformance is likely due to expenses. Now, for the Nuveen Preferred and Income ETF, or NPFI, this fund returned a solid 8.48% for the last 12 months, but it underperformed its benchmark, the NPFI Blended Benchmark, which returned 9.25%. The report points to security selection in the insurance industry and consumer cyclicals as detractors, which is a bit of a miss. The Nuveen Sustainable Core ETF, or NSCR, returned a whopping 12.22% for the last 12 months. That is quite good, but it significantly underperformed the S&P 500 index, which returned a massive 16.33%. The report highlights overweights to specific large cap companies and an underweight to Tesla as contributing factors to this underperformance. And finally, the Nuveen Ultra Short Income ETF, or NUSBI, returned 4.94% for the last 12 months, outperforming the ICE-BOA US 3 month Treasury Bill Index, which returned 4.57%. The report mentions out of benchmark allocations to investment, grade credit and mortgage, backed securities as key contributors to its outperformance. Let us zoom in on the financial tables for a moment. We can see the long-term investments at value for NCO at over $104 million, and for NUHI, it is sitting at over $94 million. These are significant amounts of money invested in bonds and similar instruments, telling us about the scale of these operations. Looking at the portfolio turnover rates, we see that NCPB had a very high turnover of 143%. This means they were buying and selling a lot of their holdings during the year, which can lead to higher trading costs and tax implications for shareholders. On the other hand, NUB had a very low turnover of 10%, indicating a more buy and hold strategy. This difference in strategy can greatly affect performance and costs for investors. When we look at the fund net assets, for the various funds we see a wide range from around $6.5 million for NSCR to over $402 million for NUB. This shows a big difference in investor adoption and scale across these different ETF offerings. The report also details some interesting leadership changes for the Nuveen Core Plus Bond ETF, or NCPB Crystal Seals. CFA was added as a portfolio manager while Kevin Lorenz retired. These changes can sometimes signal shifts in strategy or investment approach, so it is worth keeping an eye on. Now let's talk about the auditor situation. It seems there was a change in the independent registered public accounting firm for the funds. They dismissed KPMG LLP and appointed PricewaterhouseCoopers LLP. This is a pretty standard move in the corporate world and usually aims to get fresh eyes on the financials. The filing assures us that there were no disagreements with the previous auditor, which is always a good sign. Shifting gears slightly to the disclosure of securities lending activities, we see that several funds like Newag and Newhigh are actively lending out their securities to generate extra income. Newhigh specifically has a substantial amount of securities out on loan totaling over $2.8 million. This is a common practice for ETFs to boost returns, but it does come with its own set of risks. So what is the overall story here? Well, these Nuveen ETFs cover a pretty broad spectrum of the bond market, from CLOS to ESG focused bonds, and even preferred incomes. We see a mix of performance, with some funds outperforming their benchmarks and others slightly lagging or significantly underperforming, as in the case of N-CSR against the S&P 500. The high portfolio turnover in NCPB is a flag for potential higher costs and tax implications for investors, while the low turnover in NUB suggests a more stable long-term approach. The auditor change is routine, but good to note. The securities lending activity shows these funds are actively trying to generate every last bit of return for their investors. Most of these funds have substantial net assets, indicating good investor confidence and scale, except for NSER, which is quite small in comparison. The differing strategies and performance results mean investors need to be very careful about which Nuveen ETF they choose, based on their own investment goals and risk tolerance. Alright, that is our deep dive into this Nushares ETF trust filing. What is your take on these numbers and what they signal for the future of these ETFs? Let me know your thoughts in the comments below. If this breakdown was helpful, hit that like button. It really helps the channel grow, and of course subscribe for more decoded financial insights. Don't forget to join the Corporate Decoded Discord community linked in the description for more exclusive content and to continue the conversation. Thanks for watching, and I'll see you in the next video.